The yen popping yesterday after a suspected intervention from the Japanese government. This comes as the currency saw its weakest levels against the dollar since all the way back to 1990. Joining us right now is Marc Chandler. He's managing director and chief market strategist at Bannockburn Global Forex. And Marc, let's talk this through. The weakest level we've seen since 1990 for the yen. This is because the Fed is talking a little tougher, or is expected to talk a little tougher this time around. But explain this. What's been going on for decades?
Yeah, so thanks. I think that the yen is really driven not so much by what happens in Japan, but by this big policy divergence between the U.S. and Japan. So I find that the correlation, the movement of the yen, is more in line with the U.S. yields, the 10-year yield, than it is with what happens in Japan. The Japanese yen has historically been strong. That is trending higher against the dollar. But in this part of the cycle, the yen has been weakening. Its interest rate was the last of the major industrialized countries that have negative interest rates. And even now, when we're talking about, say, 4.6% on the U.S. 10-year, the Japanese 10-year yield is less than 90 basis points.
Okay, and what happens next? Let's assume that that Jay Powell does talk a little tougher, makes it sound like a rate cut is not coming anytime soon. How does this play out?
Yeah, to me, that's why I would doubt it initially that the BOJ and the Ministry of Finance intervened yesterday. But the recent data that just came out in the last hour or 2 hours does suggest that the Japanese intervened by selling something on a magnitude of $33 to $35 billion. And what surprised me is that the Japanese would intervene when they know what we know, which is, as you mentioned, Fed Chair Powell likely to have a hawkish pivot. That is, stand pat on interest rates, but talk tougher, that the confidence the Fed was looking for, that inflation was falling towards its target, is just not there right now. And at the same time, we get Friday, the U.S. jobs data, and the early look is 240, 250,000 rise in non-farm payrolls, which would be another solid report. This would seem to push up U.S. interest rates and thereby weakening the yen against the dollar.
Yeah, in fact, we're already looking at the yen at 156.90.
Yep, I think that, we got down to about 154.5 yesterday after going above 160. And I think the market, even if there is some doubt about the intervention, the market will tread gingerly as we approach those higher levels again for fear of another round of intervention. Or, remember what happened a couple of weeks ago when the Israel was responding to retaliating against Iran. And in about an hour's time, the Mexican peso, which is the only emerging market currency that really trades 24 hours a day, moved by about 7% in 1 hour. And these kinds of things have happened before in the foreign exchange market. Sometimes the market works itself up into a lather. And I think that the market does have some respect for BOJ intervention because they use such a large size. Back in 2022, they intervened with $60 to about $65 billion in about 3 operations.